Everyone will have seen this chart, the famous 4-year Bitcoin cycle. Every halving, a new bull run. Every 4 years, like clockwork. But here's the truth. That cycle isn't some phenomenon. It just happened to line up with something much bigger. Global liquidity. Let me show you why that matters and why understanding it changes everything. Bitcoin has always moved with the tides of global money and credit. And those tides are driven by 3 main forces. Global M2, that's the global money supply. When it expands, Bitcoin historically rises. When it contracts, Bitcoin tends to fall. DXY, that's the dollar's strength against other currencies. As it weakens, it tends to benefit Bitcoin. And when it strengthens, we see Bitcoin pull back. Finally, the Fed funds rate. That's just US interest rates. When they rise, liquidity dries up. When they fall, money floods back in. Both moves tend to impact Bitcoin inversely. Those 3 forces form the rhythm of global liquidity. And when you line them up with Bitcoin's price history, everything becomes clear. In 2015 to 2017, China began massively expanding its money supply, causing global M2 to rise. Rates were still low, and Bitcoin rose with that liquidity. Then, in 2017, as the dollar weakened, Bitcoin went vertical. But when rates started climbing again and M2 contracted, the rally collapsed. In 2020 to 2021, it happened again, only bigger. The fastest global money expansion in history. Zero interest rates, currencies everywhere weakening, Bitcoin exploded higher. Then, as central banks tightened, M2 contracted, rates rose, the dollar strengthened, and Bitcoin fell. That's what people mistake for the 4-year cycle. It's always been the liquidity cycle underneath. But in 2023, something broke the rhythm. The Fed was still holding record high rates. Central banks around the world were tightening. The dollar was still relatively strong. By all logic, Bitcoin should have struggled. But something happened that most people don't know about. Janet Yellen, the US Treasury Secretary, switched from issuing long-term debt to short-term bills. That drained about $1 trillion from the Fed's reverse repo facility and injected it into the system. It was stealth liquidity. Bitcoin started to rise against the tide, and it's been rising ever since. And now, with Bitcoin only 10% from a record high, the Fed is cutting interest rates. Global M2 is rising once more. The dollar is weakening fast and will have to keep weakening for the current administration to achieve its goals. Bitcoin has reached new highs in one of the tightest environments in history, and now that environment is beginning to loosen. I'm not going to say the 4-year cycle is broken, but those relying on it could be making a costly mistake. If you want to learn more about what really drives this stuff and why you need to be holding Bitcoin, hit the follow button.